Who's excited? Huh. I'm flippin' excited, I'll tell you that. And it's great to see a lot of you back, a lot of familiar faces, but also a lot of new faces. I was wondering, where were you the last 5-6 years? I know some of you are recognized, but of course not everybody, which is great. Because this is my 10th time I get to present here. I really want to thank Jay and the team for inviting me back, so I must be saying the right things to be invited back. Or maybe the feedback form you guys fill out might, rated me highly, so I tremendously appreciate it. It's great to be back. It's great to be back in a bull market. I've never experienced one, so you need to tell me what it is like. I have no idea. It feels exciting though, I'll tell you that. And really excited to be enjoying this here, because I started my career in mining back in 2008, 2009, so I got a glimpse of the rare earth craze, made a little bit of money then. But when I started my own company, SOAR Financial, it was downhill from 2011 onwards, right? And now we're here, created a lot of opportunity for us, really built a lot of products around this industry and just having fun in this industry. I can tell you one thing, 2025 was the second best financing year we've had in the junior mining space since we started trading or tracking it with Orin Inc. Right? So Orin Inc. is part of the SOAR Financial Group. Maybe I'll back up the truck for just a second before getting too excited here. So Orin Inc. is a data company. We track financings in this space. So we know on a daily basis how the sector is doing. Right? And we started doing that in 2011. I bought the company in 2016. And we track financings below $100 million, all equity, all cash, and companies below $1.5 billion in market cap. So the true end of the junior market. We don't track the $170 billion, or you've just heard Troilus speak. We don't have those equity financings in our database because they're just too big. It's not a true reflection of what is going on, right? The Orin Index we put out weekly really showcases where the status or where the industry is, meaning we benchmarked it back in January 2011, which was admittedly probably the frothiest time in our space in 100 years. I don't know. I'm making that up because I wasn't alive back then, so I don't have any reference points. But it was a very frothy market, and that's where we set the benchmark, and we have been consistently hitting that 100 level. Like even on the moving average, we're starting to hit that 100 level, so we are entering frothy territory. And it seems like the guys don't have my presentation. So I'll just make stuff up. You can track it. The only problem is it's being recorded. So I'll try to stay as close to the numbers that I prepared, and good thing I spent a lot of time on that presentation, that I know many of the numbers top of my head, right? But going back, so 2011 was great. We've had the ups and downs, 2013, 2012, 13, and 15 in particular. We raised $2.2 billion roughly across the whole space. Last year, we raised $6.8 billion within our coverage universe. And that's just as high as 2021, where we raised like 40 million less. But it's right on par. And we've seen about 1,663 financings done in its entirety, right? That's about $4.2 million per financing. And if you were here last year, I was harping a big time about value creation in this space, right? A lot of companies can raise money, but who's really creating value? What happens if you raise $1 million? Typically nothing, right? You don't create any value. What are you going to do with that? You're not going into production. You might be able to drill 1,000 meters if you're lucky, because you also have to pay your auditor, you have to pay your accountant and everybody else, right? So you don't generate anything. I've had a nice slide prepared where I showcased the last 5 years in terms of like financings below $1 million and below $2 million. And the good news is we've seen a lot less financings below that threshold. In turning that around, it might actually mean that we're going to see some value creation, or at least the companies have an opportunity to create value. Right? Just mentally going through the slides in my head, we usually start with a big number, the 6.8 billion. We break it down into the amount of financing. So I just mentioned it, 1,663, and the average dollar amount was about $4.3 million per financing. So really sizable. You can actually get a year's worth of work done with that money. You can drill and maybe even put out a resource after that. So it's meaningful. Banker and broker activity. So within the Orin Index, we also have a factor like how active are the brokers. It's really, really important because especially in a bear market, you need to understand, are they incentivized to support financings? Because in the end, everybody tries to make money in this space, right? They clip a commission, they get their fees. It's fantastic. We all remember the cannabis days, and maybe we got distracted there. The brokers definitely got distracted because nobody wanted to finance the mining companies. And we saw that in the number of brokered activity, especially in 2022 when the market sort of died down again. We've only seen like 102 brokered financings, only 47 bought deals. And that's in 2022, right? Now, last year, we've seen 314 brokered deals. A lot of activity because there's no more competition. Like, have you participated in a cannabis financing in the last 12 months? Well, I've never have, so I'm a bad reference point, but that's completely died down. And there's no AI craze while it's happening on the public markets. There's no IPO boom or anything happening. Like, I haven't seen any. There's the odd AI company on the CSE, I think, but I wouldn't call that an AI boom and listing boom, right? So there's no competition for our space, and the brokers are fully focused on our sector, which is great. I also wanted to take a look at, say, where's the money flowing? Who's actually raising money? Is this a market where the tide lifts all boats? It's not yet, which is a positive in itself, because that means we still got a long ways to go before that happens, and maybe before we reach the end of this bull market, right? Just looking at the amount of deals, and I looked at average discounts, because it's an interesting indicator, like what do the companies have to give up to raise capital, right? Back in 2023, the average discount for a company that was trading below $25 million in market cap was like 34%. So it was a big discount, reaching really the limits. And that includes the CSE, by the way, as well, because I know the TSX, I believe, has a cap. And back in 2024, we've seen that discount actually decline massively. So it's dropped down to 17%. So there was more interest. It's popped up again, though. That means the money has been diverted and maybe the focus is elsewhere. What we've seen as well, like a lot of the big money is it's flowing to proven concept explorers, and not companies that try to explore some random moose pasture, really testing a theory. We're not at this stage yet where money flows willy-nilly into anything. So the market is still selective, which is really, really good, and I want you to be selective as well if that's one of the takeaways here, right? It's really key. The other thing is, like, that has me very positive, and why I don't think we're in a really rampant bull market or anywhere near the end yet, is the amount of new listing activity. Like, look around. Like, I looked through the list of this conference, and I've been doing this for 15 years now, so I recognize the names, and I can still point out all the names that I know. Like, there's not a lot of new names, or it's easy to point out the ones that I actually don't know, because it's, like, I'm exaggerating, I don't know every company in detail, but you've seen the names, right? There's maybe a handful, maybe 10 that on this list here amongst, 300 exhibitors here that are new. So last year, and I have some numbers to back that up, what I'm telling you as well. So the TSX tracks that with their MIG reports, I think it's market statistics something. And back in 2025, we only had 55 listings or new listings on the TSX and TSX Venture. The year before, it was 52. No change, no activity, no flurry. I haven't looked at the CSE, which is usually a little bit more dynamic, perhaps. But overall, there's no new listing activity. There are the odd new deal coming online, but nothing that is out of the ordinary yet, where it's say, okay, everybody's listing their dockshite projects, right? So, which is really key. So. But also we've seen increases in market cap by 89%, equity raised plus 53% across the board. One other thing I wanted to point out was just, of course, the trading volume. Like, the trading volume's gone up 6x, right? So there's a lot of more interest back in this market. But I still think, and I said it somewhere yesterday, I believe, that we're only in the fourth inning. This is still early. There will be a correction at some point, and that'll be healthy, because I have a hard time already finding stocks that I find attractive at these valuations. But we also got to get used that we're probably in a new price paradigm. Like, what was expensive or cheap at $2,000 might not be as cheap anymore or as expensive at $48, because if you use the new numbers, there we go. Look at that. We're online. So I'm going to skip the first few slides, skipping that. So that was one part I wanted to show, really just the distribution. It's not a broad bull market yet. Corporate activity, I was just talking about that as well. Mining is still the most important sector on the TSX. I think that's just a statement, that's just fact. The one thing I wanted to share that was this year, the new listing and the new listing activity. We had one less listing actually this year on the venture than we had the year before. So there's no frenzy out there yet. It's coming, I'm pretty sure it's coming, but it hasn't happened yet. Right, really key. And the other thing is, like, one thing I talked about last year here on stage is really the connection between our space and really the macro. Like, if you follow us on YouTube, you follow my YouTube channel, Soar Financially, for the longest time I used to say we discuss the macro to understand the micro. And the micro for us is really just this space, what's happening in this room, what's happening with gold and silver. That's the micro for us. And we've been looking at the macro, trying to give us some indications of where things are headed. And we got that last year when the Fed first cut interest rates back in September 2024. We got an understanding. Okay, this is happening, because back in March 2022, the Fed started raising rates once, and then in May twice, or at two rate or 50 basis point rate hike, and the sector completely died. Risk capital disappeared, liquidity dried up in our space, and it's taken 2.5, 3 years to come back. But we needed a signal from the Fed. Is it alone the Fed? No, but it's something that we can track. And it's very coincidental that it usually happens around the time that the Fed has something to say. I really want to highlight, I should have maybe put it in a different color, it's really the Jackson Hole meeting. So back in March, after PDAC, the market started to move. We've gotten a little bit more clearer language what might be happening from the Fed this year, but no concrete, we're going to cut 3 times this year. But the market was pricing in 3, 4 rate cuts. So we've seen more willingness to invest into our space. Liquidity was slowly returning, and you see it in the chart. We started running up. That's the GDX, by the way. GDX I used. And you can see, okay, it started moving in March. That's where I would put the needle. But it wasn't euphoria. It was great, everybody was happy, stocks were going up. But then in Jackson Hole, August 22nd, where Powell more or less said we're going to cut rates in September, 3 weeks later, the market just took off. And you can pinpoint it. I can actually put the call-out box there, right? And that's how closely related actually our sector is also with the main markets and the macro picture. I really wanted to highlight that because as long as we don't see a trend change, maybe we get a new Fed president here in May who's going to cut interest rates down to 0, we're nowhere near the end of where this is going, right? I don't want to be too excited. I really have a hard time seeing a bear case for gold, silver, and the miners right now. Of course, world peace could always happen, we're always hopeful and optimistic, but I don't see it. Offering size, I'm going to skip that. I mentioned that to you guys already. In the interest of time, I think we should skip this one as well. It's just more or less corporate exploration strategies. And $12.5 billion were spent on exploration last year. It was put out by S&P. But I do want to give you a few really important takeaways. This is an example. I don't want to put the company name on there because the name itself is irrelevant, because I want to use it as a highlight of what to pay attention to when you do participate or buy something in this market. And the tide lifts all boats, of course. And this thing is floating like you would not believe. But they raised money. It's a company that issued 16 or 17 million shares at half a cent to themselves, paid $84,000 for it, issued another 9.5 million shares at 5 cents, which in general I don't have an issue with. That's why it's only a very small red flag. But now they came to me as an investor and say, hey, Kai, would you give us 50 cents? I was like, hell no. You didn't give me any of the half-cent paper. Why would I pay 100 times more than you have paid for it? And I get sweat equity, don't get me wrong. People put in the work, put in the effort, and that's what the 5-cent round is for, in my opinion. But the other 17 million shares, they're going to offload that at some point. They got it escrowed and all of that, and it's not all coming to market the second the company lists, but the company is now trading at 85 cents. So they generated about $22 million worth of value for themselves before they made any money for me. And I don't want to be that sucker holding that back. And it was visible, they shared that in the original presentation, but it's not in that deck anymore. So you got to do some digging, all right? So my point is really just pay attention to what you're buying out there. And with the frenzy returning and a lot of new listings, just pay attention to what you're buying. Take a look at the share structure. Of course, you can always trade it, but don't call yourself an investor if you buy these things for the long term, please. Some more observations I'll run through really quick because I wanted to share some stock picks with you as well. I brought some. So what are we watching? Liquidity, tariffs, permitting, meaning what's happening there, what are jurisdictions that are interesting, and maybe more importantly is what am I paying attention to now that I'm a portfolio manager of a fund based in Germany now as well. I want to see a clear roadmap. What kind of catalysts can I expect? Permitting as well, because a lot of companies are coming to market now. They're saying, hey, we're the best company, we'll have the lowest all-in sustaining cost, but they're only going into production in 7 and 8 years. I could not care less about that. It's great, there's probably some optionality in there and they're heavily discounted, but I want something to go into production in this cycle. I have no idea how long that is going to be. It might be 2 years, 3 years, 4 years, but 7 is a stretch. Right, and I'm using the 7 just as an example. Then it comes down to management, which is the other one, because I've run into a few companies that were having a hard time raising capital, and it's now even clearer why they had a hard time raising capital. And it's really just management. Maybe it's a one-person bucket shop, and they're not even willing to add more people or change now given this. And they might even have a decent project, but if the management is not willing to change or adapt and really change course, given the flood of cash they have access to, then it's not for me either, right? And then just value creation. What can they do with the money? What are they promising you after they raised money to do, right? And I mentioned it earlier, market funds, stories that already worked, meaning they're further down the road, meaning they're closer to production decision, and then versus concepts. We're too early still in this phase that concepts are getting fully financed. Of course, if one of the big explorers, or maybe Ross Beatty starts a new project or company, of course we'll all flock to it. But even if it's moose pasture somewhere in Idaho that never seen a drill hole and is 300 kilometers from anything that's worthwhile talking about. But that's the exception. So I want to toot my own horn a little bit here as well. I stood here last year and I said I can't pick the same 3 names again that I picked 2 years in a row. I should have done it. The good thing is that I personally didn't sell anything of Banyan or Montage. I've only sold my FireRead position. But I didn't recommend those stocks last year, so it's a bit... but my point is persistence. And I've learned a lot over the last 12 months personally when it comes to trading. And the thing is, like I've missed the most, and I'll hopefully do it better the next time around, is the high conviction plays. Like I was fully convinced that Banyan is going to turn into something. I was fully convinced that Montage, since I've been on the project down in Côte d'Ivoire, is going to turn into a mine. Of course, we got lucky with the Lundins coming in, so it might have not been 1,600%, might have been 500%, but it was the conviction. And the other thing is I just didn't own enough of my high conviction plays. I owned too much other doc crap, quite honestly, that maybe friends of mine worked on, or like where I just got distracted, and I didn't focus on the stuff that I actually knew was going to work. Because also the market wasn't there, it was giving me confidence, but now that I'm seeing that it's working, and that I was actually on the right track with certain things, then I need to listen to my higher conviction more, and I hope that's something I can share with you, because that's something I learned, right? And let your winners run as well. Take some money off the table if you need it, but letting them run. Like personally, I still own my Montage position. I told you last time I trimmed a little bit back in early 2025, but I'm really happy with having it let run, because it's a high conviction one, because I know the story really well. That's why I'm letting it run, because I know where it's going to go, or I think I know. Like I pretend, right? But you get my point. That's something I want to share with you because it's really important, and that's something I learned. That's why I wanted to share it. Last year I shared Pan Global, Ares Minerals, and I'm going to run through it right now because I'm out of time here in a minute. Pan Global, Ares, and Cartier. I underperformed the GDX, and I don't like it for various reasons. Cartier did great. We outperformed by 60% the GDX, great. But all the other 2 names, and I sold my Ares position during the year, but I still have all my Pan Global. Recently participated in the financing. I'm going to tell you why it didn't work out. Like I think it actually did. I didn't lose any money, but we didn't beat any of the benchmarks. Okay, with those picks. I'm still happy with it. I still own it, but I got 3 new picks for you guys, and I want to run through them real quick. VR, 15 cents, 62 million market cap, 46 million working capital. Goldfields holds 19.9%. It's the Exo-Cisco team, and they just got a ton of catalysts coming. They don't need to finance. They're looking for another asset to add as well. It's just a very cheap post-tax loss season opportunity to buy something that is backed by one of the best management teams in the space, and it's flying under the radar in my opinion. So we all own 3, by the way. Troilus, you just listened to, really high conviction this year as well. We own it in the fund that we run, now at $2. Of course, it's had a move already, but at 1.1 billion, I think it's still dirt cheap. I'm not going to give you a price target, but you can do the math. You just saw the presentation, so it's really good timing that they were on before us. But they also have a ton of opportunity. The Germans are involved. This gives me a lot of confidence because we're going to do some of the processing for them, right? So really happy to see that. And production decisions coming up very, very soon. So 300,000 ounces in Canada, equivalent, you tell me what that's worth. It's not $1 billion. If you look at an Equinox or others, this should be a $3, $4, $5, $6 billion market cap company. Then last one, San Lorenzo Gold. I was flip-flopping between this one and another name that is also presenting here, but they just put out a banger of a hole and they haven't even press released it. So they shared it at the conference here yesterday at the Metals Investor Forum, and we own it in the fund. We bought it at 80 cents back in December, and they put out a hole of 224 meters of 0.109 grams per ton. They added the intervals together, which is not the nicest way to do it, but it's a banger of a hole. That stock is going to react tomorrow. I hope it lasts for 12 months so I can stand up here in 12 months and tell you, look, I told you. But there's more holes coming where that one came from, so we'll see where that goes. And I wish you all luck with us. Do your own due diligence. It's highly advised and strongly recommended. So don't take it for granted. As you can see, like we made 32% and we underperformed. So I do apologize for that. But with all that said and all the hiccups, thank you so much Make sure to follow us on X. I'm the @JR Mining Guy. We have 2 YouTube channels, Soar Financial, Soar Financially, and the Golden Newsletter together with Brian London. Really thank you for it, and good luck out there.